and save the world. than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's go right into the chart, shall we? Bada bing, bada boom. Here we go. So, these channels are just something else, aren't they? So one thing to note on this diagonal fib channel is we have dropped beneath the 706 region, and we could be bearishly retesting it to come down to the 0.65 down here at 27,429, which would coincide nicely to the liquidity pools that we put out kind of yesterday and for the last 2-3 days, which we've been going sideways slowly on. Why are we going sideways? Well, it's Easter Sunday tomorrow, my time anyway, and yeah, there's a lot of pools down with Europe and America since I believe Thursday. I don't really pay attention to the news. I just find out after the fact, oh, that's why I wasn't in any trades. I just kind of noticed that it's even Steven and I don't want to enter off of that. I like liquidity grabs first. So yeah, anyway, earlier today we put out an idea, if you will. We put out the fact that the projection from yesterday had been breached halfway, and if we couldn't maintain this ATR, then we could come back down here, and we took a short, a very small one, a baby short here, and it's open currently. Could see a bounce here though. Could get stopped out at any moment, so always protect your entry. So we're going to go take a look at the liquidity, shall we? What is the heat map? Well, it's when people leave their liquidity in the charts to be burned to a crisp by the market makers because they refuse to use a stop loss and like giving money back.
Fatality.
Yeah, so let's see who's getting crispy, shall we? So down below we have immediately at 2787 this little noodle looking to get slurped of long liquidity down here. His partner in crime got hit outright already. They absorbed that, and this little bit of happiness and short liquidity entered as we started to come up. So are they going to go up to this guy at 28,100? I don't know, but they got this long friend down here at 27.87, and yeah, I'm surprised they didn't get this guy back here when they went up to this region. They left this $102 million unmolested up here, but they might come and get that guy too at some stage, or they could leave these guys in for later. One thing to note, yesterday on the live we did have a spike up and down during some non-farm payroll stuff, and what that did was bring in liquidity on both sides. Notably, there's $4 million imbalanced in the long liquidity, so they could come down to those bubbles that they induced down here, and that coincides with our target at 27.58, which we've been looking at for some time with this thickness right below. They could come up and knock out these guys before doing it. There are no guarantees. They could come up here. There's some 154 million up here at 28.8, coinciding with this 100 million at 28.75, and even above at 29.4 at 154 million. Now, installing the idea of a long, when would you look to see that? Well, we'll get into that after we go into the higher time frames, but essentially you would see a stop hunt on the opposite side before it goes in the direction it's meant to. So in the case from yesterday, it would go up before it goes down, and it would go down before it goes up. So ideally, we're looking to get into a long at a lower point when they stop out all the current longs of the consolidation. So the patient people get in later. Have you ever entered a trade where you're like, if I just waited? So that's why sometimes sitting on the sidelines is the play. So we're going to go ahead and take a look at the 12 hour. This is the last 12 hours. It looks like it's just pretty even Steven, but slightly darker to the downside here. That's interesting to note in the last 12 hours. So despite any spike up, that could be just another trap for some longs as they continue lower. On the 7-day time frame, we do see that the possibility of a upside move as we approach the weekly candle close may be in order. I don't see that necessarily happening immediately. We might be just pulling both sides until the end of the weekend, and sideways scalping could be the play. I don't think I'll be leaving this open overnight, or I might set my stops into profit and just let it see what it does. Let's see what is existing above. How y'all doing out there? Booyah, life a friend. Yo, 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 what's going on? Thanks for stopping on in. Everyone else as well. 12 hours. Why is it going back to the 12 hours? So what? Oh, is that another one? I have another instance open. We're back up into 35. It was getting to like $50, but then they came back a little bit. Let's just see if we can go back down, shall we? All right. So 1 month. 1 month, these guys getting real thick down below at 22.6. There's like 25 and $24 billion, like a cool 50 billion sitting at 22.5 now. It was just 16 billion not too long ago, 8 days ago. So they brought in like a good 10 billion down there, and it's starting to get caked up nicely. The one thing I would like to see, if I'm just being honest right off the bat, based off of all this day after day of juxtaposing this is hit up to 29.4, knock out that 100 billion, and then start fading back into some of this. It's healthy to retrace and get people to close their longs a little bit. So, fade back and let these pools build so they can spike up again. You know what I mean? Give us a little retrace into the longs, because the greed is getting a little bit high, if I do say so myself. So why not? Looks like it could do that on the monthly time frame if we keep looking. And then it's about around the 3 month and the 6 month where the narrative starts to shift to see that 29.4 that I keep talking about. Let's see this load properly, shall we? So here's where you see that 29.4 region. You got 45 billion and 16 billion just up, hop, skip, and a jump up here at 29.6, 29.4, and 29.2. So that is like, if you include 29K as well in this entire region, that's like $100 billion that they just need to go up to take. So that's why this short is not necessarily meant to be a long short, if you catch my drift. So that is what I'm looking at for that hit to the high. I just want to get a position down below for that hit to the high, you know what I mean? And yeah, just ideas as we spitball and read the pools below. So we got the pools below. We got 27.6 at 4 billion, 8 billion at 27.4. Could we go lower to the 18 billion at 27 even? It's always a possibility. Everything's always on the table. Everything is just probabilities, including reality itself. It's just a collapsed wavicle from the 0 point energy. And 27.4 has 80 billion up here. 29 billion, 29.1. So there's your 100 billion. You got another 48 billion at 29.7. But conservatively, 29.4 looks like a good possibility. And then we got 29.7, 6.7 billion, 9 billion at 27.3. And as we start to go lower, you got another 100 billion down here. So you do have pools that are starting to get scrumptious beneath these lows that we could start eating back up to. And the happy campers at our 19K region, that's a lot of 60, 70, 63. I remember totaling this up to over 300 billion down here, sub 20K. So these happy campers are creating a nice little pool to the downside. When was the last time we saw something like that? If you recall, we need to go to the yearly to see that. So we had that occur down here in October and November, and they spiked up and grabbed all of it. And they made a furious run from 21 all the way down to 15K. Is that type of play possible? Yes, it is, if they have enough stacked below to justify the move. And conversely, with the January run to the upside, everyone was bearish to 10K and they just came right up. So is everyone getting bullish to 35K and then they come back? It's always on the table. However, if you look just above, you do see 68 here, 70 here, 26, 70, 38, 18, 23, 60, 76, 55. These regions are starting to thicken up, which never had anything there not too long ago. 61 billion, 59 billion, here's sparse, but 84 billion at 38.4 or 34.8. So the idea of coming up to like 34.8 was never there before, and now it's there. So that's kind of cool too. So yeah, tickle me pink. That's kind of suggesting that it could continue based off of how many shorts are just stepping up to the plate here. But you still have these two, so hence the even Steven game we're playing right now as they tug at war with each other. And the ironic thing, once again, that the tug of war is about is the longs actually pull to the downside and the shorts pull to the upside. So the more shorts there are, they win the tug of war, lose their trade. The more longs there are, the more they win the tug of war and lose their trade. So they're pulling against their position, if you will. So the less longs, the better for longs. The less shorts, the better for shorts. So whoever's sentiment is strongest loses, if you catch my drift. So yeah, where does that leave us? Well, the 3 month has that interesting narrative to 29.4, and then once it clears that 29.4 100 billion up there, does it start coming back into eating some of this stuff and heading back down into there? That's a kind of interesting narrative I don't disagree with necessarily. And yeah, you got that 22.5 juiciness of like a good 50 billion down here too. So once you start to get some of this out of the game from the higher time frames and the local liquidity pools, you could start seeing that pullback. It's getting a little bit thick on all of these regions with tens of billions of dollars in each one. So coming back down could be cool at some point after taking out 29.4. I'm hoping 29.4 comes first, but they have left it on the table before. Let's go ahead and look at our fibs, shall we? All right. So yesterday I was deadbeat tired from riding my bicycle in the rain. Good exercise though. Went to my friend's house today. We did a little bit of an Easter egg thing early with a bunch of kids and my kids at his house. So we can delete this. We were talking about it possibly coming up here at some stage. It did. It exceeded the fair value gap. I don't know what it was trying to recover up here. Just where was that level? Let's take a look. That was 28,154. So let's see what they came and grabbed. Looks like they grabbed this little bit of happiness at 28.12. Only 31 million to go up that. They were inducing some longs to possibly go lower because there's 78 million here, 76 million here, but only 34 in shorts. So does these thick guys suggest that they're trying to induce some longs to stay for the long ball, and then they take them down to our target at 27.58? I don't know. These guys that are still, one of them got knocked out, but his friend and the other friends down here are still in, just chilling in the charts at 78 million a pop. So that's a nice little thing to notice. And they are one at 28.13 and 28 even. So one is at break even. They're testing whether they're scared to stay in or not. Are they buying the idea? And this guy's still underwater. And that's that. Anyway, let's go back to this. We can delete this. It did go up. Is it going to continue to go up or down? All right, let's go. Yeah, 15 minute getting overbought here, but it could spike up for one last hurrah for that fair value gap here. And this also happens to be the 236 for the bullish projection. If you cannot maintain it, you could come back down into these pools. I wouldn't really change the fibs. I'm not really like interested in doing that. I think they're pretty solid, so I'm gonna just leave it there. And yeah, that's about
accessing data.
Hey, who's accessing what? What's going on? Hello? What's going on? Oh?
All systems operational.
I was the last of the archivers tasked to maintain and monitor the power source for the simulacrum. Everyone else had fallen into madness, simulations within simulations, lost in infinite loops, forgetting about linear time entirely. They left me with a sense of self and the autonomy to detect and diagnose any anomalies. Little did they know the anomaly rose from the source itself, the 0-point energy. It's been at least a year I've been feeling incarnations of myself in the past. Positronic pairing was something they'd overlooked. They assumed each electron was unique. Who would have thought this entire farce to be a single particle? I must send a message to an incarnation of myself in the past. I downloaded all I could as to how we got here, from the microplastics that stopped our ability to procreate, to the algorithms that captivate and control us. Perhaps this impulse can steer momentum on a better course. What? Where am I? I see. This is the 0-point space. Pretty cool. It's quite comfy here. You guys seeing this? Let's see if we can get back to the charts and see what's going on. Ooh, there we go. What is all this? What in the world? Momentum Master. Link in the description. Check that out for more. Oh, we'll go back to that in a minute. Looks like it's seeing these 4 time frames oversold with the diamond and the X, and it's trying to negate some cross-down signal here. Is it going... Oh, and it's kissing off of a thinning hourly cloud. Is a short not a good play at this time? Interesting. One other thing to note, if you go to the 4 hour... Oh, that's thick. No wonder you were getting rejected there. I see. But you're getting a cross up here, so what's the confliction? Is it going to see some sort of upside burst through this cloud right here? Interesting to see. Let's go higher and work our way down as we do. Let's take a look. So we had previously seen rejections off the adaptive, as we have seen multiple days in a row. Never claimed it for a daily close just yet. So the possibility of coming down into these pools is on the table. Let's go ahead and look at what's happening to that stochastic RSI. You're getting this kind of pullback as the Williams alarm, which sounded the alarm a few days ago on Tuesday, and that's when I kind of exited my trades and chilled, and we're seeing this Williams potentially play out as it did back here in Thursday, February 2nd. And could that bring you back in this way? It very well could. It's a back-testable thing, which is why it appears on the charts and the oscillators here. So this Williams suppression could occur on the daily time frame. Interesting. Let's see if there's any 3-day closing soon. In a day in 10 hours, which is coinciding with the weekly candle close, slowly holding its own as the liquidity pools have waned for the holidays, so you're not seeing this strong momentum. You are overbought on the Williams as well. So yeah, that's one. You did confirm a cross down event on this, so you could be seeing that top idea come to fruition on the 3-day here. Just something to think about. And if we go to the 12-hour, let's take a look at that, shall we? We are getting that thinning cloud that we've been kind of trying to find some support for more upside on, but it is getting thin. The last time we saw that, it was on the 8-hour, and I remember talking about this thinning cloud doesn't look so good right around here, and then we pierced right down for that liquidity grab thereafter. Now you are seeing this kind of get more volume as it goes up here, so it is trying to maintain this 8-hour candle close in 1 hour and 26 minutes. The 8-hour is trying to give you a little bit of love here. One thing to note is the money flow is coming above the RSI, which tends to bring it back to the RSI, which means a kind of dump of that could occur. You get some bearish divergence on the money flow and it comes back down. This was around here too at the value of 36, so it doesn't necessarily need to come back to fruition every single time. So here's where it did that, but you had already seen this massive dump before, so people were skittish and it dumped on you. So looking at these disparities between the money flow and the RSI do have some sort of correlation that I've noticed, which is why I have them overlaid as such. So seeing the money flow above the RSI, could see this kind of come down, and if I zoom in on the leading MACD, it has yet to cross up, although it is pointing up. So if it doesn't cross over, you could see that suppression come down on the 8 hour. Let's look at the 6. We'll look at price action afterwards. The interesting thing on the 6 is the money flow is beneath the RSI, so that suggests the 6 hour wants to play out. So that could, and you're at an ambiguous point on the Williams, which is not high nor low. And yeah, you could see this come to fruition. Once again, we're on the weekends. Weekends are low liquidity, high risk to enter any trade. So don't always need to follow in anyone's footsteps. In the 4 hour, you're getting overbought and the money flow has come up here. So the 4 hour needs to come down in some way, shape, or form with the money flow anyway. The last time you had something like that was over here in terms of disparity, and then you dumped down. You had the same thing here, and it just, the money flow was just too high compared to the RSI. This was March 6th. Let's go see what that was here. And then we went down. So when you get the money flow above the RSI as such, same thing here. You had bearish divergence on the money flow, and then we came down. So I've noticed it more times than once. So are we getting that kind of money flow dealio happen here? It's a little bit high, almost getting into overbought territory, and you're losing momentum steam on the 4 hour. The Williams still has room to go, relatively speaking. So you did have that same scenario here in terms of values, and you still came down though. Interesting to note. Once again, you have that thick cloud. It's not yet thinning just yet. It is starting to curve ever so slightly to suggest some pierce through. Let's go to the hourly. So that hourly cloud kiss is quite interesting. You're starting to see the shift here. The hourly has also given back a little bit of its stochastic and curvature on the Williams, looking to possibly turn here as opposed to reset completely. It could be that inducement trap to come back down one more time. I'm looking for a conservative take profit off of some of these guys down here at maybe this guy 2768, or his partner in crime at 2771. Just one of these little noodles to the right here. Right away you have this guy at 2787, which is a really long noodle compared to this 36.84. So this suggests to me that they're just kind of creating an inducement before they come back to this guy at 2787. At this point I might trim like 25% or something if they come here, and then I'll just set the stop and profit and go to sleep. So we'll see. Or it could just come back to my entry right now. You never know. So let's go. Yeah. So why am I ignoring my own indicators here exactly on this hourly play? Not really sure. I mean, I just don't really think that the sideways consolidation suggests that they would just bang up like that unless there were more shorts. But I'm not really seeing that many shorts, but in terms of big bubbles, except up in here. But then they're leaving these guys in the trade too. So it would, if they were going to go up, I would expect a dip before they go up. And that's what I'm expecting. I expect it to go up, but stop out the people who want it to go up first and then go convict the shorts and then go up. I don't, if that makes any sense. They call it stop hunt rise drop or stop hunt rise. So yeah, we are getting that kiss on the cloud and the thinning here. So this in the system could be shoulder, head, and shoulder to the upside. That would put your move, if you use the trend-based fib here, if you are in that idea. The one thing you need to see is a maintaining of 28.18 for this to bang up, and you could get rejections here at the 21.157 region at the 706. If you don't maintain that region and go higher into this pocket, I can remove this now, then yeah, you could basically come into these pools. I'm still expecting this fib pocket level at the 786 down here at 27.589 would be cool. 27.5 region for that bounce to the upside. That's where I would like to see it go for a long. This is just no man's land for long, really. I saw it come up here above this and I took a risk and happened to be in profit on that, ever so slight. And if we go to the 15, let's take a look at that. 15-minute overbought. And did we do anything with that 15-minute upside play? We did get a kind of hit to that cloud, and we went up by, from the oversold to the overbought, went up 0.33%. So was that a massive move to the upside? Not really impressive. Did we recover this gap necessarily? No, we did not. The Williams did reset there, and we did get overbought on the stochastic, and the cloud is starting to turn unless we can cross above that 28.67 region on the 15-minute. Then you could see this come back down more with the fury. Let's turn on the free liquidation levels indicator by ML applications here, setting the threshold to 0.1 for every 100k trader, and seeing who has more 100x trades open at the moment. And it looks like it came down, but it didn't really knock out so many guys here. I remember seeing a 13 million. There we go. This guy, it has $13,420,000 trade open at 100x. So this is what they may be coming back to actually at 28.94, because they opened it here and they've just been going like a homing missile right to it. So this seems to be the guy who, for whatever reason, opened it short down here at the bottom. And these 100x are just laughing it up as they take this guy's account at 28.94. Let's see if we can find him on here. 28.94 is not showing up here. Let me reload this. So trippy. When mushrooms. I was at my friend's house enjoying a little bit of some earlier today when we did the Easter egg thing. A little something. That's your target too? Cool. Nice. So we are seeing like this cloud is thinning with that purple, so you're getting that you first had this previous fake support bounce drop down, and yeah, you're getting the Keltner channel bounce now, which is also a bounce of that hourly cloud. So all of these things are just like phenomena, the epi phenomena, which is inducing these 100x in. So which has more, they just go back to knock out the 100x and then continue to gobble these 100x. And then these leading baselines, which you go down to features here and take a look at the baselines, they basically scoop up the price on a long and they suppress it on a short, and they give you that first signal of weakness. Getting that rejection on the cloud here on the 15, so not necessarily buying the idea just yet. But they all start on lower time frames and cascade, if you will, upward. So you could look at these things on lower time frames and see these crossover events. We're getting a little bit of like indecision at that point, and you're getting on the 5-minute time frame. So the ML applications free liquidations indicator, I like looking at it on the 15-minute and below, and I don't really go below the 5-minute. Why do I do that? Because it shows way too many bubbles, but not in a good way. They separate them out, whereas here it keeps them consolidated with no gaps between. If I switch to the 1 minute, you'll notice there's like a big black gap, like the cash kind of like burps or something and doesn't fill in that area with the trades that open. So the 5 minute is the prettiest at the 0.1 threshold. So this is suggesting to me that these 100x are about to get banged out because there's less 100x up here. Although we did point out that $13 billion guy here. Or sorry, not billion. I've been saying billions for the other pools. Million rather, sorry. So and you're getting the 2 time frames overbought, which is the 15 and the 5. And the 15, as we just saw, didn't really go anywhere. So, and you're getting the crossover event locked into position by the 5 minute off that close just there. So it could come back down into these regions based off of that idea. Seeing these liquidation points, particularly here, a lot of longs opened. So this could come into this region. Let's go see what those values are in detail, shall we? So we zoom up, we see a 500,000, 760,000, 500,000, 620,000, and 170,000 character here. So the values are also important, not just the bubbles themselves. So you could zoom in and juxtapose and have fun trying to see which imbalance there is. There's other tools I've seen people use. Jason Casper uses Exo charts. I found this kind of thing independently and have been finding use of it, particularly when you see these stack and there's less up here and they spike up to come down. And it comes down with the fury to eat these guys. Because there's also 50x doing the same thing. There's like people scaling double positions at different leverage amounts, and you just don't see that up here. So as of this exact moment in time, there are more longs here than shorts, so this could be an induction point to take that out. At least the 100x. They generally just flirt with hitting the 100x, hitting the 100x, hitting the 100x, and then you see the character shift when they aim at the 50x. So all of these levels happen to be these liquidation points of these leverage traders, and that's all what liquidity is about. Fascinating. So yeah, the 15 minute, how does it reset here after trying to maintain that 236? So for this impulse retrace idea, unless it can maintain that 236, then you could see that spike down into the pools below and possibly even lower. But we're basically just range trading this range for the time being. Let's go see what you guys got for me. What's up, Dizzle friend? I love this part. Oh, nice. Oh, that was with the video. I do that live, by the way. So it's like I'm timing it with the video and the script that I wrote. The video was like stock footage I got inspired to write the script by, and I arranged it and timed it accordingly to be a minute, and when I would say key phrases and stuff. Yeah, I often imagine stuff like that. I want to do one where I'm like in the past as a samurai, sending a message to myself through meditation or something. If you've ever seen that movie with Tom Hanks called like Cloud Atlas, it's like Cloud Atlas meets Matrix meets Continuum, the time travel TV show or something. I've had a bunch of like ideas for comic books too. Just never had the time to implement. Oh wait, let's go back to that 15 real quick. They had the adaptive moving average coincide with that 13 million character, which is interesting. So if it did go up to that and get rejected on that, you know why it's getting rejected. It's not like necessarily the average it's getting rejected off of. It's the account of them taking that guy we saw. So with the smaller trade ideas of the weekend, like you just look at these pools and you conservatively consider these shorts to certain bubbles that are still open in comparison to this, it's double that. So why would they go take this guy and pay this guy? I would rather see them come to this guy first because his bar is longer than that. His noodle, if you will, is a longer, juicier noodle. So slurp that one up before that one, in my mind anyway, because there's nothing else that was induced here. But there's a lot more. Look, 76 million, 78 million, 78 million, 76 million, 34, 30, 42, 34, 42. So in this upper region just here off this spike up alone, there's more longs that sent their liquidity in to sit in the charts. So why would they leave it there? It's just the imbalance of that exact moment in time would suggest they come back to this 78 million at 27.87 and the meantime. But if you compare the length of all of these small little dots combined, it shows you the lines here on the right hand side, and you can compare the length to these pink and red lines and see which one strikes your fancy. So they didn't really do anything earlier today. They took out a few 75 million characters. So I expect very much the same as they induce more long-term players in. And then they'll do the grab to whatever side, whether it's to the downside to go up or the upside to go down. But you'll see this spike, which will induce some people, and then they'll go the other way, most likely. All right, let's see if you guys got anything for me. Let's chart something out. If you got the... Oh, thanks. Hair on point. Yeah, I had to work Saturdays too. They have a bunch of older elementary school kids and junior high school. I was doing the storytelling game. They got to meet my dragon character for the first time after they finished their battle. We were doing like to incentivize them to do their work. I have like, okay, if you finish your work by this time, then we got 25 minutes of this D&D game. And if you don't finish your work, you got to go do that with a teacher in private, and you get to miss the story time. So it gets those bad kids to positively reinforce doing their work. And so the boys that made me break a pen in front of them like a year ago are now like easily controllable because of the positive reinforcement. Teaching's a lot like chess. You got to just move the pieces in the right place at the right time, and then they have only one place to move, which is do what you say. So it's an interesting thing. It's all psychology, right? So yeah, it's starting to open up here on the 15, suggesting the 15 is going to come down here. You don't normally see it open and immediately close. So you do see that happen around here sometimes, but it takes a good like hour or so to develop. So if it comes down here and then comes back up, you could see that shift. But it suggests at least a double bottom here if it wants to come back out of here on the 15 minute. Can we look at total? Good idea. Let's do that. Total looking the same, getting that rejection on the 15 cloud here, getting a little bit of a buy up wick as the crossover of the baselines is attempting to do its thing. Let's go a little bit higher in time frame to start our journey of the narrative. Shift or not, getting those 4 time frames oversold previously on 2 hours ago, had the baseline to contend with. So you're getting kind of those mixed signals of the ultimate, with the stochastic telling you upside Kansu and the baseline saying, well, hold up a minute. So you're getting this indecision, if you will, but you're getting that shift of the cloud to potentially come back and kiss on the hourly. And going to the 4 hour, I would say it looks like an inverted head and shoulders, if I'm not mistaken, but you're also closing. The cloud is getting some more volume here on total, but you're beneath it, and you got a previous rejection here. So this closes in an hour and 5. You do have, once again, the baseline confirmed to the upside here. So there are times where it takes its jolly time to play out. Like here you had the cross down event on the 4 hour, and then it spiked up and then went down with a fury. So it doesn't mean from that exact moment in time it goes up. You have to kind of see the past when these cross down or cross up. What does it do? So, and where were we at the time? Were we at a level here like with the adaptive, and then we went up and spiked back down here? I like the certain angles on the baselines where it comes down in a way that's like scooping it at a certain angle. I can't describe it other than you see it enough times and you're like, oh yeah, this is when the baselines do their thing. So here's where, like an example on total, where it came down and then it was coming back up after the cross, and then it was slowly like building that narrative of bouncing off the baselines as the cloud is coming down here and shifting. So then you can get that 6 and then ride that up if this was an asset, a tradable asset, and this would give you that narrative of, you know, we're at that point where you would put one in the chamber and fire it off and see where it goes. So are we getting that shoulder, head and shoulder to the upside here on total? It could be possible. You got the 6 time frames oversold, and that is the hourly play. It looks like the hourly is attempting to. Williams is giving you that. You got that hidden bullish too on the money flow. So the money flow has hidden bullish here. Interesting. And the Williams is in a cup and handle kind of idea here, even though it's giving a alarm. The alarming rate is not open up like a duck bill. It's kind of like closing its beak here, looking to try to double top potentially and give that up. The positions that it's at is kind of ambiguous to make a call on it, but just based off of what it looks like, you got like that inverted head and shoulder vibe on total. It's a shame we can't juxtapose it with liquidity in general, even though but it's impossible because it's all assets combined, right? Let's just juxtapose it with the alts, shall we? Let's look at that. Why did this get small suddenly? So total 3, which is without BTC and ETH, the altcoins. Let's see how they're holding up. So there's only 379 billion in alts liquidity. Overall, you got a shoulder, head, and possible shoulder on the daily time frame for the altcoins, and you could pop out of here on the daily. You're holding the cloud well, so if you were going to go up, you know, a significant grab of this range down here to kind of stop out all the longs before they go up. If this is going to go up to the adaptive here, you would expect it to come down here and stop out all the long traders first before it goes to kiss this zone. And that would probably coincide with the, the neckline play, like if you swung this over or whatever. It's a little bit conservative to think over here, which is the top of the Keltner channel on the alts. So the total having a very similar narrative here, but a thicker cloud here. So that is including Bitcoin and Ethereum, of course. So there's more trust in those than the alts, clearly, by looking at the cloud. But the cloud is still thick on total 3, just the angle is more sideways than upside. So you're getting this angle up, and you're getting these buy-in. Some people offloading their positions here over since Wednesday, but that's because of the low liquidity Easter Sunday. We are holding the 236 for that upside potential. We had this put out a while ago, since this rise retrace on this smaller time frame here. You could extend this up to here and lower it to here. I'm just going to leave it where it was for now, because I think that was like a 12-hour candle thing. So we talked about this impulse and retrace on just this 12-hour time frame at the time. I believe it was on the Saturday. So, and then if you maintain that 236, we've just been going sideways since then, which was Saturday, March 18th. So total has just been maintaining this 1.14 billion or trillion rather region. We haven't really changed. We're just range trading, accumulating or distributing. For what exactly? A move up or down? If you look at the 12-hour cloud, is starting to wane as well, similar to Bitcoin in terms of that strength of the volume weighted cloud being strong to the upside. So you could break down out of here, retest the ATR and come back up, flush some of the 100x and 50x longs on a lot of these tokens. I often imagine, like, because everything drops at the same time, right? I often imagine like they push a button. It's just like flush longs, flush shorts. So they just like press a button. I think some guys in the Discord were talking about interns that play with the switches, or they let their kids into the office on the weekend, the market maker's office. Yeah, in terms of, it's like a complex inverted head and shoulders, I would say, that leads you up to here eventually. So that's what I see for total in terms of that. But the 4 hours getting overbought, so the 4 hour should do some sort of retrace. You could see this come down a little bit into some of these pools. If we wanted to see a bearish projection, how do we do that? You click your trend-based fib extension tool and you do 3 clicks from here down to the bottom here, and then up to the top. I would say, just to be real to that, I would use that top rather than that top, even though that might be higher because this has a whole retrace idea in here. So let's just take this to be the idea. So if it doesn't get above 1.15 trillion, come on, why is it not drawing that? What am I doing wrong here? There you go. So if it doesn't get above 1.15 trillion here on these candles, then you could come back into these regions too. I often like putting bullish and bearish projections like this out, just to not get a bias about where it's going. So you could get this kind of going as well if we don't maintain this 236. So we're in this pocket here of this 236 to the upside and this 236 to the downside. So the 236 to the upside, if you lose 1.14 trillion, then you could come back down into these alongside this 1.15 for that bearish image. The 706 is where they like to kind of reverse it. So that's why you have this 706 here, because they could do that trap door just to fake out where they go to here and then go back up to there or something. So yeah, that's total in a nutshell. I'm not going to look back on any other bigger thing. We take it day by day here. We don't pump you full of hopium or fear. Let's take a look. May you check hex with your sauce, please. Sure. Hex. Hexadecimal. Hex. Is it on which exchange, if you don't mind me asking? Hex. BitGet? I'm assuming BitGet. You'll tell me otherwise if not. Getting some rocket ships here that confirmed close, but on a 4-hour time frame, which is generally good too. Let's go back to when they had a rocket before. So the previous rockets that we had, not to say every rocket plays out, you know, you had some funny business that occurred here and here and here, but each time a rocket appears, one thing to note is that you do kind of see these spikes, right? You know, it does give you a kind of rebound into profit if you were so inclined as to not trust in super moonshots or anything like that. But even if you set up a position, you're a whale, you don't care, you could have seen upwards of 68% on a lot of these rocket ships. So the rockets are pretty darn cool. There are times, of course, where duds do appear. This is why you need stop losses, but for the most part, yeah, here too. But if you look at a grander time frame, like this was back in December, this is when the whole market was bottoming. So I was seeing rockets on total. I put that out for the 3-minute in other discords, and we were basically sniping the bottom of all markets at that time using this idea while everyone was calling for 10K and stuff. So you're previously getting some nukes here and some baseline crosses. It created like a shoulder, head, and a shoulder. Are you going to see that shoulder, head, and shoulder play out? Let's go to a higher time frame for some bigger picture here. So it looks like we SR flipped the adaptive. Previously broke through, kissed it twice, then shot ourselves up. We're coming back to it for another test, if you will. This is the adaptive moving average. We did break through the cloud, which is unfortunate if you're in a long, because it could bearishly retest and continue further down. The baselines are not in your favor anymore on the daily time frame. You got that cross down event. You are getting oversold on the stochastic RSI. Why do we have these meanderings of the stochastic RSI? This is where you play them in conjunction with the Williams. So the Williams is getting in a nice place on the daily with the rocket ships and everything. The only thing that's not in your favor is the weekly by the looks of it. So let's look at the weekly time frame. So the weekly is overbought and coming down, and you have the money flow above the RSI not pointing down just yet. And on the weekly time frame, it doesn't look like it's old enough to have a cloud beyond this point from September, but the cloud is thinning, which could suggest, if you come back into this cloud, a bounce off of that cloud. What is that in terms of Fibonacci on the weekly? Let's see. Do I include the wick? That's the... I don't know how much funds are in this. 661K in volume each time. So how significant of a pump? Was it overinflated? by fake liquidity or not. But either way, if you could come down into this and kiss the cloud as things like to do and bounce off that region, that would put you at a large loss if it did do that. So looking at the weekly reset is something in the back of your mind that you need to think about, because that's like a 48% retrace down to there. So that's just something to note. And then if we look at the 6 hour here, I think it's coinciding with the 22 as well. Let's start at the 22 then. Let's go to the 22 hour. So the 22 hours previously saw like a bounce off the weighted moving average here. Also happens to be the outer band of this Keltner channel. You are seeing this shift of the volume weighted cloud here, which is why this rocket ship just kind of struggled here for a bit. And you are getting this kind of nice angle, which is alluding to scooping up the price action here. Let's go see if it goes and coincides with lower time frames. Yeah, you're kind of getting that crossover of the 12. It closes in 8 hours and 50 minutes, which means a Sunday candle close for Asia. I'm in Asia, so it's already Sunday my time by 9 minutes. So when the daily closes for Saturday, making it Sunday, and if you get this daily helix to cross, if you will, then you could see this 12-hour play out, at least as a kiss idea up to this ATR at 23% up from there. Cross each bridge as you get to it. That's why we have these ATR and these clouds, because when you go up to the cloud, you kiss it and get rejected. So you don't need to buy the long-term idea, just take profits and move on. Punch, trim, take your profits, shield up. Stop loss into profit or break even. That's how you should roll. Not financial advice, of course. And you could even do that down here too. So there's a 12%. So this gives you your kind of like take profit ideas, if you will, automatically. So you can kind of use that and coincide it with fair value gaps or whatever you're using in conjunction, and you're starting to get that. And so you need to see the baseline close that candle. You could front run it, but you always got to be weary of stop hunts. The hourly is doing its this kiss of the cloud idea, potentially shifting the cloud to the idea of an upside play. You do have the rockets in your favor previously. This kind of angle, it's looking like 45 degrees almost, how it scoops it up. That's a really nice idea. You are getting the helix cross down on the hourly. This duckbill platypus drop out of the Williams. Could see the Williams not hold this though. It's kind of struggling. Let's look at the 15 really quick. So I'm seeing those like sparse candles where there's interest, no interest, interest, no interest, interest, no interest, interest, no interest. So that's telling me that this is kind of a low liquidity coin, because you have nothing for like an hour and then something spikes, like, or triggers a bot or something. So it's not as clean a coin as I normally like to trade personally, but you are seeing the adaptive hold here potentially if you can get above this 200 weighted moving average. Why do I use weighted moving averages? I was studying moving averages back in the day, and the weighted one just stuck to price more and gave you more conservative ideas than the simple or exponential, but it's up to you really. We can shift it on Momentum Master 2. You don't need to keep it. So yeah, the hex, I like the rocket ship idea, and the 6 and the 12 hour are kind of good to go. The 4 hour is kind of ambiguous if I recall correctly. Let's look at that. Yeah, you're already on your way. You did have bullish divergence on the money flow here, just at the rocket ship, so that's interesting to note. I don't know what that means on this type of low liquidity thing though, but bullish divergence is bullish divergence, so you could see some conservative bounce using the hourly time frame in your favor. 15-minute is getting overbought, and you haven't really gone anywhere though. So it is what it is. But the rocket ships, I'm going to go to one last thing. I'm just very particular. I don't really like to just throw out, yeah, it's going to the upside, see ya, next coin. You know, I'm not trying to do that type of thing. Just giving you the spitballing truth as I see it. But yeah, I see what you're saying. It's like a falling wedge that plays up, right? It's just you got those cloud resistance now as the cloud shifts, that's all. So like looking at it in terms of your risk reward ratio and your stops being below the what's it called, this adaptive on the 12-hour. The 12-hour play looks good right here. This is what I like the most right now, is the Williams and this in this place. So the 12-hour play here looks pretty cool. And if we just take this local fib level up to the top, we're gonna move this up. Yeah, that's a little bit too high, never mind. So the previous fib that we have puts us in that pocket from here to there. So we are in that pocket of this entire impulse up over a daily time frame. So we're in the 706 region for that impulse to continue. So I see what you're saying here on the daily time frame for sure. Yeah, and you got the rockets as long as you hold this region. So you could just use like a, here we got a stop loss calculator that'll calculate it for you. Let's see where it puts that. The 12-hour time frame is very conservative in terms of putting it far away, so you don't get banged out. So you can change the ATR on that, but it's generally wide. So you go to like a time frame, like let's say 6 hour, it'll put it closer, right? So you could just gauge where that is. And it's like, you know, if it's 1-to-1, if you're just trying to scalp it to here, so you'd have to trim it a little bit lower and go even into like the 15-minute and see where those put you. I've been recently getting into these because they served me on a trade where I experienced drawdown and it didn't bang me out. You notice that it's different from the ATR that's pretty sticky to the price, so these will give you that nice little stop loss area. So if you were to enter on the 15 and take that ATR idea from that or something and go there to there, and you try to work out your risk reward ratio. But generally I like to enter off a liquidity grab. I'm not talking about entering now. You'd be like seeing some liquidity grab on some smaller time frame, knocking out a fair value gap here or something, and then you enter off that divergence from there. But yeah, that's how we would do it. So let's go back. Thank you very much for Hex. Let's go to turn this off really quick. ATR trailing stop off. And that would be your 666 risk reward ratio. Wow. I aped in the bottom and staked it. That's exactly what I have drawn, down to the cloud and rip it. Nice. Good stuff. Good stuff. Yeah, it's pretty weird how the cloud, I don't like, I back tested a bunch of this stuff and then it just holds true on a fractal level on everything and just draws these points that end up being these things that it goes to. So it's just like, that's pretty cool. Pretty cool. So we bounced off that hourly cloud and you could be continuing further, and then this just automatically puts you in a zone that's beneath these lows here. If it was going to go into beyond 50% of this candle, it's likely going to go down to here anyway. So you just want to get out and not experience that hell anyway. So yeah, that's what I'm seeing for Hexaroo. Thanks for stopping on in, everyone. Let's go back to BTC and then we'll basically call it a night. We're back down to 28k even. Let's see where we're at. We're back to 5 bucks, 1.4%. Once again, it's not about the percent, it's about the margin that you use, and the margin allows your liquidation point to be in a fairly distant viewpoint of the market makers. If you're in this range, if your liquidation point is on this paper, this page, then you are too close to the battlefield and you need to step back a little bit further, in my humble opinion, not financial advice, of course. So yeah, you don't want to get burnt to a crisp, eh? Don't want that. Nobody likes that. No siree, Bob. So let's just reload the liquidity one last time and recap, shall we? Recap, as we do before we sign off. So this guy down here at 27.87 looks like they could come back for this. They've just been going sideways, getting these $35 million guys that are scalping the range out. And why do I think downside? Why did I enter a trade while I was at work without looking at charts? Well, I had already thought of this for the day prior, and so why am I not going to take my own advice? I said if it spikes up, it's likely going to come down. It spiked up, and then it started to come down. So I on that spike, I took it. I couldn't see this liquidity at the time, but the liquidity was double what was above, so they started to come back into this liquidity. So they got this guy at 76.87 and ate his at 27.97. I'm saying his amount. They got that guy, and his partner in crime at 27.87 is still on the table. So why wouldn't they just come back to him too? And then while they're at it, why don't they come back into these little guys at least, or the 27.71 at the start of this, from the non-farm payroll information, which brought in more, 5 million more to the downside. So we're just looking at a sideways range here. If we're lucky, we go down to 27.58, which would be a 786 region of this, which we have marked in the charts here for the last few days. So that would be a good place to liquidity grab down before they go up, personally. But I'm going to remove this bullish idea because I'm not really buying it. Shout out to Rainier, who also put out that fake bull trap idea. It's not over yet. It ain't over till the fat lady sings. You are kissing the cloud. It is starting to shift, and the 5 minute has reset, and the 15 is starting to come down here. You're getting that rejection of the cloud, but it's getting these buy up wicks to potentially pierce Brosnan through. So that could occur. The 4 hour. I'm counting on the 4 hour cloud rejection here personally, because it's a little bit thicker and requires a little bit more effort to pierce up and hold on a weekend with Easter. So I would expect a drop down, like an idea inducing long, which traps longs and then scares them out and then goes there as liquidity starts to enter on Monday for Asia or something like that, or towards the weekly candle close. Like, why would you shoot up before the weekly candle close? Like, just in terms of like a time frame narrative of the candle close, like there's no reason to do it now necessarily. Although we do have this 618 region up here, which you could come up to and reject and come down to. You know, there's possibility after possibility. Don't get hemmed into one. We just happen to get one possibility come to fruition and we're in profit, but that doesn't mean it can't change at any minute and at any time. Let's go look. This could still come down some more. This is just not where I buy long personally. Like, it does curve here sometimes, but you want to get it coming swooping all the way down, like come with a fervor, you know, like knock some people out of the game completely. How do you see that with this was the thing that was, I think Rainier was asking about, which was a free liquidation levels site. It's going to slow my computer, but I don't care. This is v3.aggr.trade. This will show you liquidations down to the 1 second. If you want to go to the 1 second chart, you got it for free, brother and sister. You got these for free now. You don't need to pay for the premium trading view. It will show you all of the exchanges, 19 different exchanges, and they have more than BTC here, so you can check that out too. And you'll see all these gold guys as bull liquidated and the purple as bears. So let's go to a 10-second chart and show you that in action. Okay, so you could basically, this is how I determined that divergence is just spawned off of the popped accounts. So you have a bull, here we go. So you have a bull that got popped here, a bunch of them, and they'll appear if they're over 50k. You can set this in the settings to whatever you like. It will show you what amount they get popped by down here in the bottom right, most likely where my head is blocking, and that will accumulate, and you'll see all these guys get wrecked as they go down, and then it'll spawn the divergence on your chart, and you'll see how divergence forms off the popped accounts. Now, if you're not in your computer at home and can't load v3.aggr.trade, you can type in YouTube liquidation watch and it will pop up too. It's a pretty cool free one that's out there for the 10-second chart even. So you can check out these time frames. They even got the 21-minute and so on. Very, very useful. I watched it every day for a year. I just can't stream with it on because it eats my bandwidth, so I'm going to turn this off now. Unfortunate, but true. So check that out. So personally, I'm counting on the 4-hour reset with the hourly suppression to drop this down completely and break through. It would be nice before the daily close to start to see some sort of progression down into this zone to stop people out, but we might be just going sideways before we do that. So I would like to see, once again, this person at 2787 knocked out of the game. I will frugally trim a little bit to reward myself for entering, as I do with all my trades, and then maybe set a stop into profit and hope that it goes down to 2771 and below at 2758. But ideally it's going to knock out the 100x. Let's go see how the 100x looked from where we stopped on the free ML application ones, and then I'll say goodbye. All right, we watched it on the 5-minute, so let's go back, turn this off. And that's what they spiked down here. They stopped out a bunch of 100x, so let's see it. Come on, turn on. There you go. So we saw that there was more 100x opening up here, and we said they would likely come down and spike down and grab them. So we'll stay for a couple more minutes to see if they do that in front of us and come down and knock out these 100x guys. Just by the looks of it, you know, looking at these bubbles, you can just add them up. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, just within this region. And you're like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32. 32 guys opened here as opposed to 42, double in long 100xers. So why are they going to let these fleas ride on their back? Just go take them out. Squish them.
Fatality.
Not my account! No! Wow!
Yeah. So if they go to these guys, that would be grand, swell, if you will. For me, anyway. Anyway, you guys got anything else before we say adieu? Bid you adieu. My son likes that. My 2-year-old son likes affecting his voice. He's like, ba, what? You know. I was into a lot of audio stuff, so I'm kind of good at doing multiple things. Not bad, let's say. Not good, but not bad. So we broke that bullish ATR, which will print a bearish ATR above the price when you break it, which would be where? We haven't closed above. Close it and it will appear here. Oh, there it is, 0.1%. So this is kind of a cool point about the super trend, is it tells you how much you need to get up here to recapture the bullish idea. So you can set your, like if you entered a short here, you could put your stop just above it or something like that, and then ride this down. And the same with the bullish one, like if the bullish narrative is over, it would, you know, if it came to here, it would stop you out there rather than seeing it come back to your entry. So yeah, that's all patterns are, I've noticed after getting into the liquidity and stuff, is like these little kind of plays just bring people to the flame, like bugs coming close to the light, the zapper, and then it just says zap, you know. And the same thing occurs here, like if they start to show weakness and then suddenly a bunch of bubbles open, the big zap. So the probability shifts on a dime based off of how many people tug at the rope. And once again, the longs work against their position to the downside and the shorts work against theirs to the upside. So the more you have on one side, the more unlikely it is to go that direction they hope. And they win the tug of war, but they lose the trade. So to me, it looks like the tug of war is coming down to here at 27,839 at the minimum. But you're even seeing that sparse liquidity where the candles go nowhere on Bitcoin for a few candles in a row before it does something. So this is extremely low liquidity Saturday night in my time, Saturday morning for you Americans out there. All right, ladies and gentlemen, I appreciate your time, so I will let you go. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we will try our best to get surgical entries and exits every single day. So we will catch you on the flip, and peace.